For the first time since its listing, the share price of Ola Electric has fallen below the initial listing price, hitting a low of 75 rupees on Tuesday. And we've talked in multiple videos about the reasons that have caused this, but just a quick recap. Firstly, Ola Electric's market share in the electric scooter segment has fallen drastically. In April of 2024, they held 52% of the market, but by September, that number had dropped down to just 27.9%. And while Ola Electric is still the market leader, companies like Bajaj and TVS, with 21.2% and 20.2% market share respectively, are catching up quickly with Ola Electric. Now, Ola Electric's market share did climb back up to 34.9% in the first half of October, but we're gonna have to wait and see whether that number actually holds, if they're able to retain that market share, or whether it'll drop back down, because they did have a big sale, the Boss sale, and that might have sort of artificially increased their market share temporarily. I also want to quickly look at the CCPA's notice, because there is a minor update there. So they issued a notice to Ola Electric where they were accused of misleading advertisements, unfair trade practices, and consumer rights violations. And Ola responded, claiming that 99% of the 10,644 complaints filed with the CCPA had been resolved. However, this statement didn't sit well with customers or Kunal Kamra, who continued to criticize the company online. And now, according to a recent report, the CCPA isn't taking Ola's claims at face value. The department is planning to reach out to Ola's customers directly to verify if these complaints were indeed resolved. All right, next up in the news, Swiggy's IPO is finally here. The company is set to launch its IPO for subscription on November 6th, with shares priced between 371 and 390 rupees each. Swiggy aims to raise 11,327 crore rupees through this IPO, valuing the company at 87,299 crore rupees. That's about $10.38 billion. Swiggy is going to raise 4,499 crore rupees through a fresh issue, while the remaining 6,828 crore rupees will come from its offer for sale. Now, let's compare Swiggy with its main competitor, Zomato. So Swiggy reported a revenue of 11,634 crore rupees in FY24, which is slightly below Zomato's 12,114 crore rupees for the same period, but there's a bigger gap when it comes to profits. While Zomato made a profit of 351 crore rupees, Swiggy posted a loss of 2,350 crore rupees, and this difference in profitability may explain why Zomato's valuation is 2.5 times higher than that of Swiggy's. But Swiggy has been pulling out all of the stops to attract new investors. Earlier this month, they launched Bolt, their 10-minute food delivery service, and they also recently partnered with PharmEasy to roll out 10-minute medicine delivery services as well. However, Swiggy's quick commerce service, Instamart, recently hit a snag. A glitch in the system caused over an hour of delays, frustrating customers with longer wait times. And according to a delivery executive that INC42 talked to, the issue involves scanning orders and payment processing. And for a company gearing up for a big IPO, this glitch is definitely not ideal, especially with the launch less than a week away. All right, next up in the news, and speaking of quick commerce here, reports say that after Flipkart and Jio, even Tata is stepping into quick commerce with their new platform, Neu Flash. Now, Tata already has BigBasket for quick grocery delivery, but with Neu Flash, they're aiming for an all-in-one platform that can deliver a range of products, from groceries to electronics and fashion. So how does Tata plan on doing this? Well, Neu Flash will rely on BigBasket for groceries, but for electronics, they'll tap into their Croma stores, and for fashion and lifestyle products, they'll be using Tata Cliq. But now let's talk about infrastructure. So startups like Zepto, Blinkit, and Swiggy have around 1,500 dark stores combined, but Tata, well, they've already set up 400 dark stores through BigBasket just for grocery, over 500 Croma stores for electronics, and more than 1,600 Tata Cliq stores for fashion and lifestyle. So if Tata can create a delivery network that's as efficient as these quick commerce players, they could seriously challenge the market leaders who currently control over 85% of the market. So why is Tata getting serious about quick commerce? Well, we can look at DMart for some answers actually. Earlier this year, DMart downplayed the impact of quick commerce on its business, with Dipender Goyal echoing the same sentiment.
Blinkit is not really even affecting companies like DMart.
DMart even said that they have no plans to enter quick commerce, but the numbers might tell a different story. When DMart's Q2 FY25 results came out, their stock price actually dropped over 8% in a single day. Despite a 14% revenue growth, analysts had expected growth in the 18 to 20% range, just like in previous quarters, but the shortfall had led analysts to believe that quick commerce may be affecting DMart more than they expected. So what do you guys think? Do you think that Tata's New Flash could give them a fighting chance against the market leaders, or are they too late to the party? Leave a comment down below. All right, next up in the news, VC fund First Check is planning on investing in between 15 and 20 startups over the next 18 months as part of their third cohort. So what does First Check focus on? Well, as the name suggests, they're all about being the first check for pre-seed startups, giving early stage companies their initial funding boost. And each startup will get up to $500,000 to kickstart their journey. And First Check is a sector agnostic VC, meaning that they're open to all kinds of startups. But for the next 18 months, they'll be zeroing in on D2C startups, and they have some specific interests. They're particularly looking at kids brands, sports brands, and young Gen Z focused brands. All right, next up in the news, the government of Karnataka is stepping in to support startups with 2 new flagship programs. These flagship initiatives are designed to boost innovation and entrepreneurship across the state. So first of all, we have Elevate 2024. This is a grant aid scheme offering up to 50 lakh rupees per startup for those working in deep tech, AI, ML, robotics, blockchain, 5G, IoT, space tech, and cybersecurity. And it's focused on early stage startups, helping young companies get the funding that they need to develop cutting edge technology. Now, while Elevate 2024 is all about early stage startups, this next program called the Karnataka Acceleration Network is all about growth. So KAN, which is the acronym here, is a growth-focused accelerator program aiming to support over 300 startups in the next 3 years. And the program offers investment, mentorship, and infrastructure support to help these startups scale up. All right, now let's move into the funny news segment for today's video. This week, Indian startups raised a total of $253 million, which is significantly higher than last week. Let's take a look at some of the companies that have raised funds this week. The first one I want to talk about here is Jaipur-based NBFC Finova Capital, which provides loans to SMEs to help them grow their business, and they raised $135 million in their Series E round, which is the biggest funding round of the week. After that, we have Bengaluru-based B2B e-commerce unicorn Udan, and they've raised $35.7 million in debt. And this debt might be critical for Udan because last we heard about them, their FY23 revenue had dropped by more than 40% to 5,629 crore rupees, and they had laid off 120 employees. Following that, we have Bengaluru-based fintech startup Zinc, which has raised $25.5 million in their seed round. And as far as seed rounds go, that's a pretty big one. And the reason for that is Zinc's founder, Prashant Ranganathan, had previously founded another fintech venture, PaySense, which was then acquired by PayU, where he had been the CEO for the last 3 years and helped the company grow their yearly revenue to $444 million. With Zinc, Prashant wants to make it easier for parents to plan and fund their kids' college education abroad. And so Zinc has 2 flagship products. The first one is an AI-powered counselor called Ada, which helps them to decide the right university, courses, scholarship, grants, and even guides them on how to fill out the applications. And then their second flagship product is Zinc Pay, which lets parents transfer funds to their kids for tuition fees and expenses abroad in real time and at lower Forex rates compared to traditional banks. And then finally, we have Noida-based on-demand chef service platform Cooks, which lets you hire professional cooks and chefs for private events, home gatherings, and even daily cooking needs. And they've raised $125,000 in their seed round. All right, that is all the startup news that I have for you guys this week. I really hope that you enjoyed the video, and I hope that everyone has had a wonderful Diwali, and I will catch you in the next one.